Today I will be showing you a rather simple setup in the Australian dollar 30-minute timeframe. This trade does not use the fractal candle, and it was triggered using a slightly different idea that is also valid and very useful in many different trading situations. Before I begin to explain the analysis, let me grab your attention to the amount of price information I have in the screen. Many people ask me about how far back they should look. As you can see here, I don't have a lot of price information, and I'm not going to shift between timeframes as well, although the fractal candle is a concept that embodies the multi-timeframe principle without the need to actually change between timeframes. If you observe most of my videos, you will notice that this is how far you need to go back in price in order to make good trades. I can expand more on why that's the case in future videos. Going back to this trade analysis, first we can observe that between numbers 0 and 2, price makes a lower low by breaking the low number 0 marked by the horizontal blue line. This is an undeniable fact that every trader should be able to see in a price chart. You should also be able to recognize that the movements between 0 and 2 are part of what we call major flow here. The fact that sellers were able to break low number 0 implies the fact that high number 1 is now considered a solid market structure. In other words, number 1 is undeniably a level in price in which we have sellers proven to be strong enough to defeat the buyers that created the movement between number 0 and number 1. If we respect Newton's first law of motion, we will reach the conclusion that this dynamic we identified should continue. In other words, Newton's first law of motion will claim that a body in motion will tend to stay in motion until an external force acts on it. Translating this idea to market lingo, if there is no interference of market makers in this market, the trend that will resume lower highs and lower lows. Observe also that in number 1 there is a horizontal line that comes out of the moment in which higher lows stopped being produced and lower lows started. That can be called a line of sellers, and that means this is a level where the sellers who originated the entire market vector from number 1 to number 2 might appear again. It does not mean they absolutely will appear again, but if they are going to appear at all, this is a probable level. Just as side notes, notice that before number 2, the market produces a series of simple reversal divergences, which shows how you should be careful trading divergences. In number 3, we have the market temporarily testing and retesting the line that comes out of low number 0. That's an important observation because it means the market is still respecting the framework designed by the sellers from number 1. In other words, the fact that the market respects the horizontal line coming out of low number 0 increases the likelihood that it will respect the line coming out of high number 1. In number 4, price finally reaches back the line of sellers we have been talking about, and it does so while producing a series of simple reversal divergences. However, it is difficult to open a short trade positions just based on those two elements alone because we never know how much further price can go, and that's something that can definitely hurt the trade location principle that dwells at the heart of risk management. In other words, we need some sort of objective sign from price to tell us that price is indeed stopping at this line of sellers. The sign that we usually use in the fractal flow strategy is the fractal candle because it is filled with different meanings. However, fractal candles don't appear in 100% of the reversals. Sometimes the market does something different. This is one of the reasons we must learn how to actually read price action instead of memorizing it. Observe that in number 4, right after price hit the line of sellers, price creates an inside candle, which is when the candle is completely constrained by the total range of the immediately previous candle. In practical terms, this means that price is not producing higher highs nor lower lows. It's stuck in a sideways movement in a lower fractal. This also means that price is temporarily stopped, and that our line of sellers might actually hold. The idea of the line of sellers alone will not get you very far, just like the idea of the inside candle. It's the combination of the two ideas within a certain context that will create a unique situation and a high-quality trade opportunity. In this situation, we have the market making a temporary stop near a solid market structure. Beyond that, we have subtle indications that the market is still respecting these elements as we saw in number 3. We also have the series of simple reversal divergences to add yet another layer of confidence to our little trade idea. I triggered the trade you see opened in the chart at the opening of the candle next to the inside candle number 4 with a stop above high number 1. By doing that, I'm counting on the sellers that created the vector 1 through 2 to appear again and bring the market down at least to the low number 2 level. That gives me a trade opportunity with a little more than 1 to 3 risk-reward ratio. By expecting to earn more than what I risk, I can expect to make profits in the mid and long term assuming I have good trade location. Let's see how this trade turns out. As you can see here, the specified target was almost perfectly hit, and now we can start our analysis again to understand this market considering the new information that arrived. The essential point here is that simple trades like these can also yield incredibly good results. This serves as a point of comparison to the previous videos I uploaded where the market analysis was heavily detailed and advanced. Before I finish the video, I would like to ask those of you who have subscribed to the channel to check if you have activated the notification button, otherwise you might miss future uploads. This serves as a warning to those of you who might be considering subscribing to the channel. Don't forget to activate the notifications by clicking the bell icon, otherwise you will miss most of the uploaded content of the channel. If you enjoyed this video and wish to support the channel, please don't forget to click the like button, subscribe to the channel and leave your feedback in the comment section below. We already have tons of free high-quality content uploaded to the channel including live trade analysis like this one and many videos about the structures that surround the market and trading in general. Thank you very much for watching.